So today's agenda will be optimal strategies and settings for automated trading bots. So we will go through some of the strategies that are mostly optimal for our scalper, for SBot, and the third one that we have is the classic bot. I will provide you with some use cases and practical tips which I have collected since the first time I started trading at Bitsgap. Oh yeah, by the way, I forgot to say that my name is Dmitry. I'm the portfolio manager, trader, and together with Bitsgap, we are working on the automated trading optimization. And today we will go through the demo trading as well to discover strategies. How to use demo trading, how to use the simulator, basically paper trading, to discover your own strategies and to test as many strategies as you want, absolutely risk-free. So that's the idea. We will go through the risk management that we have in automated trading, some simple things like stop loss and some unique features that allow us to avoid extreme pump and dump scenarios on the market. I will also explain to you what the backtesting is all about and how you can use it effectively to validate and generate trade ideas. Profit maximization techniques, SBot and scalper differences, loss minimization on the downtrend. Basically, that's hedging. So you will learn how to hedge regardless of the market formation. And the grid mechanism in high frequency trading will be explained to you. So first of all, we will start with the high frequency trading, which is the mechanism which is implemented in all of our bots. And the idea here is a high-speed execution of trades. You basically won't be able to keep up with such an intense, such a quick such a quick execution of trades. And here on the chart, you can see clearly the amount of trades that occurred during this period of time. That's, I think that was 2 weeks. Yeah, maybe less, 2 weeks period on the chart here. And you here can see a bunch of buy and sell orders represented by green circles. These are buys, all right? And the red circles, they represent sell orders, executed sell orders. And there are also some binding open limit sell and limit buy orders here. And 5 in total trades. Just for the sake of the example, you see that BTC trading to USDT, and in total there were 319 trades executed by the bot automatically, and that's 5 trades per hour because the period here is 2 days. And you see that in general, like the average is 4 for each of these cryptocurrency pairs. So ask yourself, would you be able to execute that amount of trades each hour, like 24/7, endlessly? So can you stay in front of your computer 24/7 without any rest? I doubt so. So that's the idea of automated trading. You basically let the bot to accumulate profits for you without the necessity of staying in front of your computer 24/7. Here is the visualization of how automated bots execute trades. So they buy low in order to sell high. They buy low to sell high each time. Each time they spot this opportunity on the market, each time the swing occurs, the bot buys low and sells high. And that's the way of how to accumulate automatically profits regardless of the market direction. So here you can see we are in the downtrend, all right, but the bot keeps making profits, and I will later explain to you how this can be used in hedging your risk. Before we continue, I will explain to you what is the logic behind all of our bots. And at Bitsgap, on the main page, if you go to bot section, you see that here we have 3 types: the S bot, the classic bot, the scalper. All right. So what unites all of these bots is that they have a so-called grid mechanism, and the idea is that the bot, it allocates both the base currency, in this case it's Cardano trading to USDT, so the base currency here is Cardano, which is represented by the ADA ticker, and the quote currency is in this case is USDT. So you can clearly see that we have a sell zone. These are all of these sell orders. Basically each sell order is nothing more than just a grid. So that's what we call a grid. Any order, any limit order, either buy or sell, it's the grid level. All right. So we here have a bunch of grid levels, and they are proportionately distributed here by sell side and buy side. And in order to, for the bot to execute all of the sell orders, you must have on your balance enough of the base currency, and here it indicates that you must have 2,200 Cardanas to have all of these sell orders placed in the order book. All right, and in order to have that amount of buy limit orders, you must have enough of the of the quote currency on your balance. In this case USDT, and in this case it's 112 USDT to execute all of the buy orders in order to buy Cardano. The idea is to define the trading range, which is represented by the upper limit price and the lower limit price. So in the trading range, that's the area where all the trades occur. All right, so that's the area within which the bot is gonna trade for you. Like this. Imagine that we have 8 grid levels in total. So let's assume we have a 50-50 split. So we have 4 sell limit orders and 4 buy limit orders. The trading range is defined, and the price starts moving downwards, and you can see that it has triggered the buy limit order right here. So what's gonna happen? The bot will buy the base currency, in this case Binance coin, using your Ethereum. In this case Ethereum is the quote currency, and right after it executes the buy limit order, a new sell limit order right above this level will be placed, maintaining so-called grid spacing. So there is a strict rule, strict algorithm. It has a certain spacing between all of your grid levels, which it maintains automatically. So each time the trade occurs, it will either place the buy limit order in case if the sell order has been triggered, or like in this example, the buy limit order was triggered, so the sell limit order was placed right above this price, maintaining the grid spacing. What happens next? The price has moved upwards a little bit, and it has triggered the sell limit order. In this case, the new buy limit order will be placed below that level right here, and this can happen many times. If the price stays within the trading range, many trades can occur here. So it can be 12,000 in just 10 days. It can be less depending on the cryptocurrency and depending on the market volatility. It can be just 600 trades for only a period of 2 weeks. So once again, it depends on the market conditions, and it depends on whether the price stays within the boundaries. It stays within the trading range. So here you can see that each time it triggers the level, it will place a new one. So it is constantly using your allocated capital to this investment scheme, and it's gonna use Ethereum to buy low, and it's gonna use Binance to sell high, and then the profit that you've generated, a portion of this profit will be used to place new buy limit orders. So that's the idea of an everlasting mechanism. There are different variations of how you can how you can execute this logic. So you can only have a sell side, only sell zone, all right? So that means that you will only be required to have enough of the base currency on your account to place all of these sell limit orders, all right? Because here you have no intention at the very beginning, at the inception, to have buy limit orders. So you are not willing to have any orders to buy the base currency using your quote. You only want to have sell zone, only sell limit orders. So that means that you either must have enough of the base currency at the beginning, or if you don't have it, you must buy it if you want to place that amount of sell limit orders here. And the idea here is also very simple. So you see that the price has moved upwards. It has triggered the sell limit order. So what's gonna happen? The automated bot will place a buy limit order, because remember, as I told you already, each time the trade occurs, it will place the opposite. So here in this case, the sell limit was triggered, and then in this case, buy limit order will be placed below this price. So now let's go to the Bitsgap page, and here on the bot section, you see we have a chart which we can zoom in and zoom out in any way we want. And on the right side we have a simple option to execute the automated trading bot. So here we have everything we need. We have the strategy which we can use, and I will explain to you the difference between them a little bit later. So for the sake of the example, let's use the S-bot, which is our brand new bot. And here you can choose the exchange. In this case, you can choose the cryptocurrency pair. You can type in, and you can manually set the lower price, which is the it's the bottom of the trading range, like this. You see, it automatically is adjusted on the chart. So if I type, let's say 7, no, actually, this is what's gonna happen. And if I change the upper limit price the same way, you see the result. Also, you can do this, as I said, on the chart, which I find way easier, and it saves a lot of your time. That's pretty straightforward. So you can place these levels based on the support and resistance to define your trading range. So you can use it, you can place them in any way you want. Here you can also specify the amount of grid levels that you want All right, so the idea is that the more of the grid levels you have, the narrow is your spacing between the orders. So the narrow is the grid spacing, the more chances that the automated trading bot will seize this market swing. All right, so the narrow the spacing, the more chances, once again, I mean, to capture, like to seize all of these movements. Because if you have a wider spacing, let's say 15, so you see in this case this buy limit order wouldn't be triggered because the price didn't fall to this level. All right, but when you have more levels, let's say you have 70, you see there would have occurred a bunch of trades here. So once again, the more grid levels you have, the more of the market momentum, the more of the market swings you will be able to seize automatically. You can also specify the investment here, but note that the more of the grid levels you want to have, the more of the capital, of the available balance you must have, because each grid requires a certain amount of investment. And for instance, on the Binance, if you want to buy BNB, the minimum requirement for one trade, for one trade size is $10. You can't have it less. So that's the minimum requirement. So that means that you must have enough of the capital balance to be able to execute the trade. In case if you don't have enough, but you still want to initiate the trade, then you can click on the adjust button, and you see it has reduced the grid quantity to 95. Let's say if I have only $400 available, so here it states that you need at least blah 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 amount of USDT. Once again, I'm gonna click on the adjust, and now instead of 95 I have only 26. So that's the idea. If you want to have more grid levels, you must have more available capital. You can actually play with it in any way you want. You can test this using Bitsgap's demo trading mode. So here you can see it's already on in my case. I also have my one of my real accounts here, and I can easily, with the click of only one button, switch to demo mode easily. So before actually executing any real trade on my real account, I can test it. I can test the settings in the demo mode in any way I want. All right. And on the left side, you see that I have some active bots already trading for me. Like 5 of them I executed earlier today before the webinar, just to show you. So far, Land has executed 13 trades, and it has already made this amount of profit. What may confuse you here is what stands for the investment change and the bot profit, but don't worry, we will come back to this in 10 minutes. I have a perfect example for you to explain what this is all about, so just stay with me. And you see that in active bots we have the investment amount already. So each time you come back to this page, you will be able to see what was the amount of investment you allocated to this specific trade. You have your trading range defined by high price and low price. You have the grid amount here. You see that on some cryptocurrency pairs I have 50 grid levels. On some I have 130 grid levels. You see the time elapsed, and yeah, the bot profit. The bot profit stands for the pure profit generated only by the bot. So each time it bought and sold high, all right? And most importantly, this profit here, let's click on the view button. This profit is net of all fees. So we take into account the fee that you have to pay for each trade execution on the exchange, all right? So in comparison with other platforms, we are basically the only one who have this proper profit calculation. So that's the amount that you see here is net of all fees. That's the pure profit. That's net profit in this case. And when you click on the view button, you also can see more detailed information regarding this open bot. You see the amount of completed orders here, and most importantly, you see all of the open orders, at which price and what is the amount. And for those who are interested in making some extra calculations, you can export this data to Excel file, and you can then calculate if you want, I don't know, maybe if you are the portfolio manager, you can calculate the Sharpe ratio, Sortino ratio, and some other key metrics that you want to see in order to assess your performance, all right? And on the right side, a very important panel that we have here is strategies. So these are recommended strategies, and for each bot we have own recommended strategies. So you see now I switched to classic bot, and you see that the first stands ARPA, then HC, then NEO. If I switch to the S bot, you see that in this case I have some different. So these are strategies based on the monthly performance and those that have demonstrated decent returns for a given level of risk, all right? So those are the cryptocurrencies that are, how to say, mostly traded, most liquid for the last month. And we use the backtest results. Regarding the backtest, I will explain to you what this stands for in 10 minutes. And let's come back to the presentation. Now, let's discuss optimal strategies. So we will cover what the trading up function is all about. And you might have noticed, no, actually you haven't, because I didn't switch to the advanced section. So the difference between the simple and the advanced section is that in the advanced, you have a full description of your investment distribution. So let's say I want to trade link to USDT. Notice that the system automatically assigns the upper and lower limit levels, but as I said, you can always adjust it in any way you want, in any direction. And here you can see, like, let's say let it be $1,000, okay, and let's adjust it by the grid quantity. So now we have 70 grid levels and the total investment is 1000 USDT. So in order to initiate the bot, you see what we have a sell side, so we must have enough of the base currency. And so what is the amount of base currency we must possess? Here it is, 74. Now 74 link you must have on your account to initiate the bot, so that this amount of links will be distributed proportionately by these sell limit orders. And you must have enough of the quote currency in this case, because notice that we have a wider sell zone. That's why we have 60%, like even more. So it's 681 USDT out of 1,000. All right, so that's almost 70%. So 70% of our quote currency goes to these buy orders. As simple as that. And let's say if you don't have enough link on your balance, because you see that here I clicked on balance and I don't see any link on my account. So when I click on start the bot, it will automatically send me a notification to buy that amount of link in order to initiate the bot. And if I don't have it on my balance, as you already noticed, it will buy it at the market price. So I click on yes, please buy it at the market price, because I don't want to waste my time. I don't want to go straight into action. So here we go. We are in the game right now, and when you click on the view button, you here see that we have in open orders a proportionate distribution of link and USDT, and you can see all of our open orders here. All right, as simple as that. And notice that we have three functions here. We have trading up, and you might be familiar with what this stands for. For those of you who don't know, I will in the presentation now explain what this is all about in the perfect example. We also have the stop loss, and we have the take profit. That's the new feature that we implemented last week. So let's come back to the presentation, and I will explain to you what the trading up is all about. So imagine that you have defined the trading range by this resistance level and by this support level. So this is your trading range within which the bot is going to trade for you. Imagine that then the price goes upwards. So what's going to happen here is that your upper limit price together with the lower limit price, basically your trading range, will follow the price appreciation like this. You see, your upper limit price is now higher, and your lower limit price is also higher. So let's assume that later the price starts to fall and it breaches the lower limit price. So in this case, the trading range will not follow the price depreciation. It will not follow this fall, and that means that our trading range is gonna stay where it stayed when there was a last higher high. And as the price is now trading below the lower limit, below our trading range, that means that for some time we are out of the game. So the bot is not trading for us. But as the price, as the price then reverts back, so it has bounced off this level, and now it is trading again in the trading range, which is defined by our upper limit and lower limit prices. So here the action is happening again, so the bot is trading for us. And let's assume that later the price has again appreciated and now has established a new higher high. So that was the previous one, and now here is the new one. So that means that the trading range will again follow the price, and now our upper limit and lower limit will readjust accordingly, so it's going to be higher. So that's the idea. And here is a perfect example of NG trading to BTC, where we have 54. That's actually a real case from my real account, and I had 54 grid levels in total. That was the investment allocation. The strategy that I used was the SBot, and I had this trading up function on. So that means that I was able to to seize almost every market swing, so I was able to stay in the game till the very last higher high. So notice here that initially my trading range was defined by these levels. So I've started my trading here, and I've defined that my upper limit is going to be here because, okay, I saw the resistance level and all of that, and my bottom limit price was defined by the support level. But as I expected the price to breach my upper limit and then keep growing, that's why I had a trading up function on, which allowed my trading range, which allowed the bot to follow this surge. And now you see that my upper limit price is way higher. It's right here, all right? And my bottom limit price is also way higher. It's over here. So I think it's pretty simple to understand with this perfect example, in my opinion. You can clearly see that using trading up function, you are able to automatically follow the upward momentum. So you don't have to stay in front of the computer 24/7 to always monitor the market, to then close the bot, to readjust your settings, to reopen it because you see that a new higher high was established, which is now no longer in your trading range. With trading up function, you are careless about this because it's gonna perfectly follow the price appreciation. And you see that now the trading range is perfectly aligned with the higher high and basically with the support level, like almost. That's the idea. And here's the example of IOTA trading to USDT, but without the trading up function on. So in this case, you see that all of my trades, yes, I had them within my trading range right here, but because I didn't have my trading up function on, when the price later breached the upper limit, all right, so I was out of the game in this case, simply because I didn't have the trading up function on. If I would have it on, in this case, it would be pretty much like we saw in this example. I would be able to follow the price appreciation. So that's something that you have to keep in mind. So if you want your trading range, if you want the bot to keep following the upside momentum, then you should consider having a trailing up function on by simply clicking on this button. So as simple as that. So what are the sources of trade ideas? We now understand that we have free bots that we can trade on the upside using the trading up function to follow the price appreciation. So where to find these trade opportunities? So how to sort out cryptocurrencies to find the best for current market conditions. So we have a solution here. So first of all, I already told you that we have recommended strategies. So you see that here's a bunch of cryptocurrencies with pretty much decent returns. These are monthly returns. All right. So basically you can click on each of these cryptocurrencies and then go to the advanced section. So let's say strategies. I click on HC trading to USDT. And in the advanced section, you have this backtesting. All right. So the recommended strategies, they are based on recent market performance. So it sorts out best cryptocurrencies based on return to a given risk. And it also takes into account the backtesting results. So we come to the second source of idea, which stands for backtesting. and I'm gonna explain to you how to use backtesting. And here you see I've selected the period from the 11th of April till the 11th of May 2020, and according to the backtest, and backtest stands for the performance simulation using historic prices. So basically, what would be the profit generated by the bot if you would initiate the bot at that period of time? So for 30 days, it would have accumulated plus 34%. In this case, the profit is in BTC, so that's plus 34% in BTC. And you see that throughout this period, there was an upside momentum up to 66%. So here you see the higher high up from the 11th of April till the higher high, 66% appreciation. And then later a consequent drop down, 34% up to here. I mean down to here. And another example, just to compare, we have BNB, same period, but we have a slightly lower return, almost twice lower return, only 35%, and a risk of 23%. So the risk here is represented by the price fall from previous higher high. So now, using backtesting, we can compare these cryptocurrencies, and we can clearly see that NG has demonstrated a better return in terms of bot profit. So it had a return higher by 21%. Seems good, right? And it seems like that's like a final choice. But rational traders and investors, they also have to take into account the downside risk. So they take they have to keep in mind that there is a volatility on the market, and if they want to avoid extreme volatility, if they don't want to see their cryptocurrencies to depreciate by more than 34%, like let's say by more than 23%, using backtesting, you can find those cryptocurrencies that have demonstrated optimal return for a given risk. So here, if we divide the bot profit by the downside risk, notice that the downside risk for NG was slightly higher than the risk demonstrated by BNB. So in this case, NG was riskier. It was more volatile. And if we divide 34 by 34, it's going to be 1. So the ratio is 1. That means that for one return, we take 1% of a risk. All right. But here, if we divide 13% by 23 of the downside risk, clearly for a given 1% return, we must take a higher risk in comparison with NG. All right. So in terms of return to risk ratio, NG takes the first place and then BNB, because for a given 1% return, we must have taken higher risk. But in general, we can see that BNB had only 23% of the downside, whereas NG had 34%. So these are the metrics which you can easily calculate, even in your mind, and just simply to compare. All right. So I didn't use an Excel. I didn't use the calculator. All I had is the Bitsgap chart. I have some instruments here. I can choose the price range and then simply see what was the downside momentum, what was the upside momentum, and then just visually I would be able to compare. So that's the idea. Using backtesting, you can find optimal cryptocurrencies that suit your I mean, it all depends on how risk averse you are. So if you are ready to take higher risk for a higher return, then NG would be an optimal solution for you. Whereas if you are looking for minimum risk, then in this case, BNB could be an option, but I would also compare BNB with some other cryptocurrencies that had pretty much the same downside risk but had a higher bot profit. All right, so that's the logic of how you can use the backtesting. And in this case, the trading guide is pretty straightforward and simple. You must choose the ticker. You can use, as I already shown you, recommended strategies. From here you have automated trading range defined by the Bitsgap algorithm, or you can use the backtesting to see what was the result starting from the, well, in this case it's a 1 month period, and we can see that for the last month the bot has generated plus 16%. We can also choose another period. Let's say we are interested in the period from the 14th till the 28th of May. So in this case, what was the return? So it was 13% for 15 days. So if you are satisfied with this return, so based on this statistics, you can initiate the trade. It doesn't mean that the past results, they guarantee same future results, but that's basically the only available market and effective tool that we have to at least have some understanding about the volatility and what can be like a possible return for a given cryptocurrency. The third step would be to adjust grid levels and adjust your investment. So let's say if you want to have as many grid levels as you want, I mean the maximum amount here is 180. All right, so you see that in order to initiate, I have to adjust my trading range to make it a little bit wider. And it's also telling me that in order to have the maximum grid quantity, which we offer, it's 180, you must have that amount of USDT. If you don't have that amount of, you can, as I already shown you, adjust it. And let's say you want to allocate $1,000. And let's say in this case you want to increase by 60. It tells you that no, it's too much, then 50. Still too much, maybe 48. No, 45. Yeah, the reason why I'm not able to initiate the bot is because I don't have on my balance currently enough of the USDT. So let's say I close my link. By the way, when you close the trade, like the active trade, you can click on the box to sell all of your left base currency in this trade to USDT. So that's the full exit to the quote currency. I click on yes because I want to exit in USDT. I don't want any link to stay in my balance. So now I am able to initiate this trade, which is icon to USDT, adjust. Good. So that's pretty much the idea. And using features like stop loss, take profit, a brand new feature, and the trading up, which I have already explained, you will be able to construct automated trading bots, I mean strategies, to achieve maximized returns on the upside and the sideways market. Because clearly, like optimal scenarios for all of the bots is when the market is moving upwards, because we accumulate profits in the quote currency as well as the base currency is appreciating as the price is moving upwards. Otherwise, like here, let's say in this example, Lend trading to BTC, you see that the price started to move downwards, so it has accumulated some profits, but the investment changed because the the value of the base currency is now depreciating, and I have some base currencies currently in open orders here. So that means that I am affected by the negative value change as the price moves downwards. But the hedging effect here is that using this profit generated by the bot, and by the way, as I said, the bot is making profits regardless of the market direction. So it is constantly looking for buying low and selling high, and these opportunities to buy low and sell high, they emerge on the sideways market, they emerge on the uptrend market, and they also emerge on the downside market, because the price is always moving like in the swing. All right, so it's always bouncing. You can't see a straight line. You can't see the market moving like this. All right, so it is constantly moving upwards, then reverts, bounce off, reverts, like this. So this is the formation allowing us to maximize the return. And yeah, regarding the stop loss and take profit, and let's use okay, basic attention token trading to USDT, and let's say we want to initiate this bot, and I have a trading up function on, which means that if the price will continue the upside momentum, my trading range will follow accordingly. And most importantly, if I have stop loss on, so that means that in case if the price starts moving downwards, it goes lower, it breaches the bottom limit, and then finally it triggers the stop loss right here where we placed it. So that means that the bot will automatically sell all of the base currency to quote currency. So that's the security, that's the hedging mechanism, because imagine if the price then will later continue the downside momentum. That means that we will be affected by the negative value change, but as we had the stop loss on, that means that we would have exit the market over here. So we wouldn't be affected by the consequent further drawdown. So, and with the take profit, here you can only place a percentage for now. And if you place, let's say 10%, the bot will sell all of the base currency as soon as the investment change will be 10%. And the full description you can also see here. So the algorithm will automatically close the bot and sell all of the base currency. That's the idea. Now we come to a comparative analysis. So what makes classic bot different from the S bot, and what makes the S bot different from the scalper and the classic bot? First of all, regarding the grids amount, we have from 10 to 180 of grid levels for both the classic and the S bot, which you can choose right here. Regarding the scalper, 200 grid levels will be automatically placed, so you are not able to readjust it. That's the predefined. All right, so you see that here I can't even move upwards or downwards the bottom limit price, but that's for now. All right, soon the S-bot and scalper will be united, so that means that you will be able to use the scalper in any way you want, readjusting levels in any direction you want. But for now, you see that it's predefined, and in 5 minutes I will show you optimal market scenarios to use this setup. you see that the grid spacing minimum, we have that value for the classic, for the S-bot, and for the scalper, because of its nature, that's why it's called scalper, because it has even higher level of high frequency trading, and it has, in this case, more narrow grid spacing, which allows you to have even more, like, increased chances of taking advantage of almost all market swings that occur on the market. Because the idea is that some cryptocurrencies, they have different spacing, all right? So some currencies are extremely volatile, some cryptocurrencies are more or less volatile, so medium volatility, and using scalper on highly volatile cryptocurrencies that are moving crazy, and you will be able to, with this narrow setup of spacing, you will be able to capture as many price swings as possible. Backtesting is available for all of the bots. Strategies recommendations also for all of the bots. The stop loss currently is only available for the classic and the S-bot, whereas for the scalper we are testing it, and as I already said, the scalper will be united together with the S-bot soon, so that means that the stop loss will be automatically configured, and the rest you can see here. What makes the unique value? I mean, you see that the classic bot looks like the S-bot, same configurations here, all right? But with S-bot we have optimized protection from pumps and dumps, and I will show you the example also, like in 10 minutes. We have slightly different investment configuration here, so let me show you. Here is now trading to USDT, and that's the classic bot here. And when we click on the view and open orders, we see that the amount is the same, it's equal. So here at classic bot we have an absolutely equal distribution, all right? Whereas if we click on the S-bot, go to open orders, you see that here we have a slightly different approach. You see that the amount varies in the buy orders. You see that at that price there is a limit buy order to buy that amount of. So let me explain to you why this is the case here. So if you multiply the price by the amount, so that's the value. So that's the investment value for that given buy limit order. So that's how much you will buy in the quote currency. Now if we multiply this amount by that price, we will get the same investment allocation, all right? So the idea of the S-bot is to have a proportionate investment distribution, all right? Whereas when it comes to classic bot, it can be the case that for a different level, for a different buy limit order, the investment value will vary. So here investment allocation is not proportionate, but the amount is proportionate. So that's something that you have to keep in mind. And that means that sometimes the classic bot will use like extra capital from your account, from your balance. Let's say you've allocated $1,000, but what can happen is that it can absorb extra from your balance, let's say $100, all right? So in this case, your investment allocation in this trade will be increased to 1,100, and this is a, how to say, it has both pros and cons. Let's say the market is moving upwards, so when on the upside momentum you have an increased investment allocation, that means you will have higher returns. Whereas if the market is moving downwards and you now have an increased investment allocation due to the technical nature of the classic bot, you will now be exposed to a higher risk. All right. So sometimes, as I said, on the upside, it can be beneficial, and by this it can easily outperform the S-bot, but on the downside, it will most likely underperform the S-bot. So if you are pretty much sure that the price will continue the upside momentum, then you might consider opening the classic bot with the trading up function rather than the S-bot with the trading up function, just because it's most likely that the classic bot will use extra investment to maximize your return. So optimal market scenarios are the upside market. So by this we allow the bot to accumulate the profit on every market swing. Anytime the bot spots opportunity to buy low and sell high, and you see as the price is moving upwards, as the bot keeps making profits for us, we are also positively in this case affected by the BNB price appreciation. So not only we are making profits, like extra value added here by the bot profit, so not only we allow the bot to use our base currency to accumulate extra profits, in this case in Ethereum for us, we are affected by the price appreciation of BNB. So the value change here is positive. In this case, this active investment change is like, it consists of the value change, BNB appreciation, and the bot profit, which stands for the added value. All right. And on the sideways market, pretty much the same. The idea here is to earn during the stagnation. So don't let your coins to simply lie in your portfolio. Let the bot to use these coins to make additional profits for you. So during this stagnation, you are actually able to make profits. All right. So you let the bot to use your BNB, all right, which you hodl. So why would you hodl and do nothing about the coin if you can use this coin to earn profits in other currencies, in this case Ethereum? So do this. That's what we call active hodling, all right? Because if you are just a simple hodler, and let's say you bought BNB at $5 and you expect the price to appreciate, let's say, by 100% in 1 year, that's okay. That's a long-term perspective. But if you will initiate the bot, if you will allow the automated trading to use the BNB to accumulate profits for you, like additional added value in Ethereum in this case, and imagine that Ethereum will also appreciate by that time, like by 1 year, so you will both be exposed to BNB and Ethereum, so that's going to be a double effect in this case. That's the additional value. That's the profit maximization, as we call it at Bitsgap. So optimal scenarios are the sideways market and the upside momentum market. Here's the example, BTC trading to USDT, and you see that the bot profit, from now on, let's call this an added value. Let's call this profit generated for you as you let the bot to use your BTC. That's your added value. And as the price has significantly appreciated, the price of BTC in this case, you see that the total investment change is 14%. So this added value is already priced in this investment change. So without this added value, your investment change would be slightly lower. So now you can see this effect. Another example, it's BTC trading to Euro, pretty much the same. Here it more looks like a sideways market, but globally it looks like it has started to revert and the upside momentum has finally emerged. And you see the added value here as well. This was my recent case, Bitcoin Cash trading to USDT. This is a perfect sideways market, and it was ranging from 210 up to 275. So I let my bot to use Bitcoin Cash to accumulate profits in USDT, and you see it has generated 16% in total during this stagnation. So yeah, we are working on the automation to let you maximize your return, to let you become active hodlers. All right, so if you are investors and you have a bunch of coins on your balance, let the bot to accumulate extra profits for you. Let the bot to make added value. That's the idea. And with secure trading that we have, we are not only providing you with built-in hedging mechanism. All right. Sorry, in this case, for some reason it's written in Russian, even though it has to be in English. But that means the effect of automation, hedging effect. And you see that if you would simply hodl BNB, oh sorry, it's data trading to BTC. If you would simply hodl, if you would buy data at that price and then would do nothing about it, it would just lie in your portfolio. So you would be a hodler. Consequently, you see that the price has fallen to this level. So in this case, your investment would be minus 4%. But if you would have automation, in this case, you would allow the bot to make profits regardless of the market direction. You see, it was constantly making profits for you. By using automation, you would be able to offset this minus 4% investment change by almost half, and you would only be stuck in minus 2% of the investment change. So the added value that has the bot generated here, plus 4%, it is used to offset the total investment change, and that is why it is only minus 2%. So that's why you should be using automated trading, especially if you are only hodling. So if you are investors and you don't want to care about the constant market volatility, let the bot to hedge your coins, like in this example, and let the bot to accumulate extra profits for you. Another security that we have implemented, apart from this hedging effect, is that our bots, in this case Scalper and SBot, they are optimized to avoid extreme pump and dump scenarios on the market. Because otherwise, without this security feature, you would simply get stuck with all of your buy orders at the very top, all right, which is absolutely not beneficial for you, because you see that consequently the price has dropped back to the level of where the pump has started. So that means that all of the buy orders that were executed here, they have significantly depreciated. So you want to avoid such market scenarios. These are unfavorable, and they happen due to some market manipulations, because some coins, they have very small liquidity, and that's why sometimes manipulations on the market can occur, because as we know, the cryptocurrency market is by far not perfect. It's like highly inefficient even now. So in order to avoid such cases, we have implemented this optimization. So with optimization on this right chart here, you can see that the S-bot would avoid this pump. So you would have a smooth performance in this case. Now we come to the scalper bot, and here the idea is that almost even like 95% of your investment is allocated in buy limit orders and only 5% in sell limit orders. So using scalper with this configuration, you are able to, as I said, seize almost all of the market swings. And on the downside, you would be able to achieve a cost averaging effect. So that means that with each drop, you would buy a portion, a small portion. All right. Because you see, what many traders, what mistake they make is that they see that the price is falling and they put 100% investment at a certain price, and then later the price moves even lower, let's say by even like 20%. So if you would initiate only one trade with 100% of your investment at a certain price, you would be significantly affected by the negative value change. But using the scalper, if you don't know when the price will finally revert, when it will finally bounce off, using scalper, you are buying proportionately with each market fall, and then consequently, as the price starts moving upwards, all of these buy orders here, they will be sold in like the bot will sell all of these coins in profit as the price will start moving upwards. And in scalper, we have a trading up function automatically on. So that means that, let's say the price will then continue moving upwards here. I mean, let's say you initiated the bot right here. You had this drop down, and then you had this consequent bounce off. So you had many orders executed here, both buy and sell limit orders, and then the price continues moving upwards. And using scalper, you will be able to achieve pretty much the highest return currently available at Bitsgap because of the quality of high frequency trading which is implemented to the scalper. Remember that I shown you the chart and the spacing. Now actually it will take time for me to come back. The spacing for the scalper is the lowest in comparison with the S-bot and the classic bot. So that means that with this configuration, you will be able to achieve the highest added value return just because you let the bot to execute trades and to let it to seize almost every market swing. So basically you are riding on the volatility. Soon you will be able to use this strategy, the scalper, on stable coins, because as I said, we will unite the S-bot with the scalper. So that means that you will be able to have, if you want, you will have will be able to have a lower, narrow buy side, and you will be able to have a wider sell side if you want. You will be able to adjust it in any way you want, as you would be able to do in the S-bot and the classic bot. And with this minimum grid spacing, you will be able to finally take advantage of the arbitrage opportunities on the stable coins, because let me show you. As we know, we have a bunch of stable coins, the idea of which is to trade close to $1. All right, so we have USDT, we have TUSD, we have USDC, we have BUSD, and some other. You see that the price is almost 1, but due to the, as I said, market inefficiency, because the cryptocurrency market is still relatively new, these arbitrage opportunities, they happen. So stable coins, even though they have to trade to they have to be equal to $1, but in reality it's not always the case. And that is why we have here a perfect sideways market, a perfect arbitrage sideways market. And with the scalper bot, you will be able to seize all of these little price movements here. That will be only possible with the scalper, because remember, the spacing is 0.01%. And that means that executing the scalper on the stable strategy, you will be able to have almost risk-free passive income in the stable currency. So it seems like a cool thing to me, and I'm waiting for the coming update, when I will be able to finally execute the scalper on the stable strategy like TUSD to USDT. You can also find some other, like USDC trading to, you see, trading to USDT. That's pretty much the same sideways market, the same perfect arbitrage opportunities. So that's already a ready-made risk-free strategy for you guys, which you will be able to use very, very soon. So yeah, I think I've covered all of the topics for today. And once again, for those of you who want to find their own strategy, who want to optimize trading, use demo trading like I'm doing here. So I'm constantly looking for proper setups to achieve maximized return, because sometimes for a certain cryptocurrency it might be not enough of the grid levels because of the volatility of this cryptocurrency. If the volatility is too extreme, or let's say the upside momentum is very intense, and it is so intense that there are only small reverts, like small drop downs. So having as many grid levels as you can possibly have based on your available balance, you will be able to capture as many market swings as possible. Whereas if you have only few, like not enough of the grid levels, and you will be able to find out if you have enough or not enough just by testing. So the only way to learn, the only way to become pro trader using automated trading is by testing. And here you have an absolutely risk-free simulator demo trade, which you can use. You can use the backtesting, as I've shown you, to find trade opportunities. You can experiment with take profit. You can have it, or you can avoid having take profit. You can try using trading up, or you can also see the difference when you don't have a trading up function on. Alright, so that's the idea. And yeah, let me show you some of my examples. Let's say it's IOTA trading to USDT. So the idea of why I've entered the trade was that I saw that the price, the cryptocurrency was pretty much respecting its key support levels. So here's the line. Let's make it yellow. Let's make it visible. So what I've noticed that it has been respecting, and each time it approached support level, it consequently bounced off. Approach, bounce off, approach, bounce off, and you see here bounce off. So as soon as I saw a bounce off confirmation, and I've noticed then that the price has continued its rally, I've entered the trade. So even though I forgot to use my trading up function, in any case, I've managed to make 3%. Alright. So, I mean, basically I'm using key levels to find proper entry and exit points for my trading. You might be using some indicators like RSI, maybe you're using MACD, moving averages. I mean, there are many techniques when it comes to technical analysis. But for myself, I've noticed that I prefer trading those cryptocurrencies that do respect support and resistance levels. So I'm trading using support and resistance levels, sometimes using RSI and MACD to find overbought and oversold conditions. That's it. All right. And the last example I will show you, it's going to be BTC trading to USDT. So if I open my real account, I will show you that I have a history there. So a history of all of my trades. And there are some cases on the market, then I rather cancel and then re-enter it rather than staying endlessly in the market. So that was the case for BTC, and I closed this bot when the price started approaching its key resistance level. So the idea was that I will re-enter the market with new configuration as soon as I will see that the price has finally breached the key resistance level of 10,000 and that it has stayed there for a couple of days. That's something that hasn't occurred. Well, the first condition was met. It has breached the 10,000 resistance level, but after 15 hours it has then consequently again fallen. All right, so there are some market scenarios in which I would rather wait for some time to see the price action and then enter the market with like having more information about the consequent direction. So I tend to think that there will be more chances of the price moving upwards when we will breach 10,000 and will stay above this level for some days. Only then I will re-enter the market. So that's my logic, that's my humble opinion, and you can use your own techniques, your fundamental, your technical analysis, or whatever it can be, what you're using. Maybe you are using some signals, I don't know, maybe you have some paid channels, I don't know, maybe you're following some experts, whatever. But we have all of the tools at Bitsgap for you to discover your own strategies without any support. You can become experts on your own. Just, be active, be patient, and use all of the tools available to find and discover your own strategies. You have backtesting once again. You have demo mode, which is absolutely risk-free. So these are virtual money. You can trade them absolutely risk-free. This does not affect your real account, so don't worry. And yeah, exchange your ideas. Join the Telegram chat that we have. There are traders that are actually trading. They are professionals, some of them, and just exchange your ideas, your opinion. If you have some questions, you can always ask. We have a support here at Bitsgap, and we have weekly webinars which you are currently attending to really grasp the advantage of automated trading and to see what are the use cases, practical tips, what are the key differences. Yeah, so all of that is for you guys, because only together, when our efforts are combined, we can really beat the market and make profits all together. And yeah, let me see if you have some interesting questions. Oh yeah, there is a question about the stop loss, and the question is, will the stop loss follow the price appreciation with the trading up function on? So yeah, when we have both trading up function on and we have stop loss, so that means that as the price keeps moving upwards, our trading range will also follow the price appreciation, as I explained to you when I was showing you the trading up mechanism. And the stop loss will follow the trading range. Basically, it's attached to the trading range and it will follow it. So let's say if the trading range is now defined by these levels, and in this case the stop loss will be right here. Let's make it red. So with trading up, you are only following the price appreciation. You are not following when the market is falling. All right. The trading range stays where it was at the previous higher high, and the stop loss is moving together with the trading range. So I mean, your security, your basic principle of risk management, which is the stop loss, is here always with you. It won't let you to lose all of your profits. It's gonna secure your trading automatically. So once again, about the take profit, Alberto is asking, well, as I said, when you have a take profit function on, and let's say you have it 5%, I think I had it on quantum trading to use it. Yeah, I have it here. So I have my take profit 5%. So that means then my investment change will be exactly 5%. And this can be achieved by either like the bot profit will accumulate profits for me and then it will add it to my investment change. And like the perfect condition would be that the price will also move upwards. So that means that I will way quicker achieve my 5% of the investment change. All right. So as soon as it becomes 5%, let's say I had 3% of my take profit. All right. So as soon as it would have approached it like the 3%, the bot would automatically trigger the sell order to sell all of the base currency to exit the trade. So it will automatically close the bot. As simple as that. And yeah, you can always use our tips here to read more about it. So it literally it tells you that the take profit will automatically close the bot entirely and sell all of the base currency as soon as the investment change meets your conditions. So if you have 5%, then wait for the 5%. If you have 10%, then wait for 10% of the investment change. Yeah, so thanks a lot for your attention. Please provide me with your feedback. Rate this webinar from the scale of 1 to 10. And I just need to know if you find these webinars useful. And if you have any recommendations, please provide them. I will gladly consider them, because that's the only way for me to improve my future webinars, is by taking into account all of your recommendations. So the more feedback you provide, the better information, more information you will receive next time. And if you have, if you're looking for more information, go to Bitsgap main page. Here, click on the About. Go to Blog. And about the trading bot, we have a separate hashtag here. Click on it and you will get all of the relevant information about the scalper, about the S-bot. So all of the updates will be here, and use the support button to ask any question that you have. So yeah, thanks for your rates. Thanks for grading this webinar. Appreciate. And yeah, stay safe. I wish you a profitable trading. Once again, use all of the available tools to test, to become profitable. All right. And have a nice evening. See you next week.